Welcome to World Ledger with Coco Key, your gateway to global perspectives on Bitcoin, blockchain, crypto digital assets, and AI. Everything here is for informational purposes only, not investment or financial advice. Views and opinions expressed by any speaker on the show are his or her personal ones.
Wojtek, welcome to my podcast. You are my third guest from Europe. Chopin is one of my favorite composers and pianists, so I'm excited about getting to know you, your country, and your work.
Thank you, Coco, for inviting me. It's a great pleasure to be here with you. And I hope that I will be able to tell you more about my country and not just Chopin during this discussion.
Definitely not. By the way, where are you based? Warsaw or other city?
I was born in Poland. I live in Warsaw. I try to spend as much time as possible there. I'm traveling a lot, flying between different localizations. Dubai, Zurich, Liechtenstein, Hong Kong, Singapore. So globetrotter, I would say.
And your career trajectory has evolved from e-commerce and traditional finance trading system to digital and crypto asset related projects such as STO, infrastructure bridging fiat and crypto, and DAT. What triggered your transition from the traditional world to the crazy digital and crypto world?
The honest answer is coincidence. I started my career in 1996 when I started to build Polish Amazon, which is called MiCA.com, still largest e-commerce in the country. And it was total coincidence. I was invited for a birthday party by a friend of mine and was offered the job. I moved into the trading systems for traditional finance. Also by coincidence, I met several people from the banking space which were complaining about the low coverage of the tools on Polish market. So I decided to check what's available. I found a good technology provider in Italy. I went there and I brought the technology to Poland. And then I moved myself into the crypto space also by coincidence. I have a friend who was a former president of First Data for Poland. When we discussed about some guys trying to buy as many prepaid cards on the gas station as possible, I asked him why, and he said they have something called crypto. They don't know how to spend it, so they are buying those prepaid cards in order to top them up. So I looked around and I found that there is like a big gap between the traditional finance and digital asset space. And that's how Mobilum was born. It was just a coincidence, having the right people and making quick decisions.
When you were brought into the largest e-commerce business in Poland and helped build it, it was by coincidence. And then you got into the crypto also by coincidence. And that led you to so many new opportunities.
I believe that our life is driven by some things we do not fully understand. But if you are eager to learn new things, if you are eager to find new technologies or new solutions that help other people, you are always building something great.
That's a good piece of advice. You wear multiple hats. You work on different projects at the same time. But I'm most interested in learning about BTCS, the Bitcoin Treasury company listed on both Poland and Germany, and you serve as strategic advisor. Tell me about this project. For example, the genesis of the project. When was it first publicly listed?
The history started at the beginning of last year. I involved myself as an investor in other digital asset treasury companies listed on the NASDAQ. My belief is an outcome of a speech given by Michael Saylor, CEO of Strategy, who said that each country or each stock exchange should have its own DAT. I was thinking, what if I would run something in Poland? But I didn't want to go the path like it was done in the US, because now from the historical perspective, we can see that it was a kind of the FOMO. The strategy 2 years ago for those digital treasury companies was buy, hold, and hope. And now we see and we know that it doesn't work. I believe that value comes from the real operations, from services that you render, from products that you develop and offer. So when I started to think about that, I was thinking about the company which does two things for the local community. So first of all, It provides services and it offers products which help other companies, banks, financial markets, governments, and so on, to expose to the Web3 world, to tokenization, to blockchain, to different ideas that you can build on the decentralized systems. My second idea was I'm a big believer in Bitcoin standard. So I believe that for investors, each company should try to hold its treasury in something which is anti-inflation. And I believe that Bitcoin is such an asset that helps treasury to prevent value decrease because of inflation. So that was the second idea why I decided to build BTCS. So BTCS is an experiment for the local market. You can call it experiment or showcase because it's a public entity. I bought a company called Wacomtech, which was already listed on the stock exchange. And we rebranded the company into BTCS. We sold business provided by the previous owners, and we started fresh activity, which is Web3 development services products offering, keeping the treasury in Bitcoin and some other coins which help us generate additional yield, starting last September. So it's not yet even a year for BTCS. We will have in a few weeks the first birthday party of our digital asset treasury company. You can say that we are one of the first DATs 2.0 actively managed digital asset treasury. We don't just keep our coins in treasury, holding and hoping what will happen. We are looking for opportunities where we can utilize our Bitcoins, utilize other coins to generate additional yield. This is what we call actively managed digital asset treasury company. Last year, I told people from the space what I want to do. Several funds joined me on the cap table. Together, we want to showcase this experiment. In a few years, you will be able to check whether I was wrong or not, and how BTCS will be compared to other competitors in the space who still keep the treasury in traditional fiat currency versus us keeping all the assets in Bitcoin.
Let me unpack that all, because that's a very interesting and full history of BTCS. So am I right that you bought a company and spin off some of the irrelevant business and turned it into a BTC Treasury company?
100%.
And got it listed. Okay. Secondly, what you are doing is slightly different from strategy, because strategy has original business, which is software business, which is still going on. And by the side, they have this BTC Treasury. Your company is 100% related to Bitcoin and crypto assets, correct?
Let me explain how BTCS and strategy are similar and how they are different. Both companies are listed vehicles, and both companies gives investor a Bitcoin exposure through a brokerage account. So basically, you don't need to buy Bitcoin. You may be a kind of the investor who is more familiar with stock market, prefers bonds or traditional listed stock. Instead of learning Bitcoin, learning how to buy it, how to keep it, you can buy something that you know, which is like a stock or bond. So those are the similarities. The difference is that strategy is listed on Nasdaq, which is US exchange. And we are doing the same for the European market on Warsaw Stock Exchange, and we are dual listed in Frankfurt. Second, our portfolio runs validation infrastructure. We are running validators. If you look at our last report, it shows we are running validator for Bitcoin Core. We are running validator for the reward asset chain ZigChain. And we are now in the process of building a validators for Canton Network. Third, we live in Europe, which is a different regulatory regime for digital assets, while strategy is in US, which is a totally different framework. The fourth main difference is the way we finance the treasury. The financing of our treasury is tailored to our size. Polish zloty convertibles everything stays in Bitcoins. We use some warrants as well. Strategy is using ATMs or STRC, which is like digital money, as they call. Those are 4 main differences between us and Strategy.
In US, BlackRock and other companies issue ETF. In Europe, do you have any BTC ETF available for investors?
Yes, we have one ETF in Poland, but it's not denominated ETF, which buys Bitcoin CFD, contract for difference or futures. But there are Bitcoin ETFs in Europe. There are even Bitcoin ETFs which are listed on the Warsaw Stock Exchange. But this is a different play, I would say, because the role of the Bitcoin digital asset treasury company is to outperform the asset it holds in treasury. ETF is just a wrapper over Bitcoin, behaves in the exactly same way as Bitcoin. Holding ETF is like holding Bitcoin, which means you have to actively manage your position. Holding shares of a digital asset treasury company means you believe that the company can manage the treasury well, so it's more like a kind of the passive investment. Both investments are 2 different use cases depending on what the investor is looking for.
Bitcoin hasn't been performing well, and some people believe it's almost approaching the end of the bear market, which I also want to get your thought. The whole market, Bitcoin and crypto market, haven't been performing great. How is BTCS performing in Poland and in Frankfurt market? How is it received in both markets so far?
When we started our journey last year, it was one of the best moments for digital asset treasury companies. So the company was outperforming a lot. Price of the treasury company skyrocketed. Our average ratio was 8 or 9 times. So it's still trading 3x over the treasury value, which is good. I would say, I believe what you said, that we are close to the bottom, and we're all hoping that this bear market will end soon and we will have another growth market. But I just wanted to point out one thing, and this is also a big difference between the ETFs and digital asset treasury, because ETF is just a wrapper over the asset. It behaves exactly as the asset behaves. Digital asset treasury company should outperform the asset during the bull market, and also should outperform the asset during the bear market. We are one of the few companies that are still trading far above the value of the treasury we hold in our wallets. So if you ask about the financial KPIs, we are doing quite well. If you ask about the stock performance, we are following the trend, but we are outperforming the asset. As an investor, I'm happy we're doing quite well.
Congratulations. Who are your investors? For example, family office, retail, or institutional?
To answer that question, I need to give you a little bit more overview of the path, because we are now listed on the New Connect market of Warsaw Stock Exchange. New Connect market is a market for startups, the higher risk companies. Our target investor base are family offices, funds, or high net worth investors who are looking for passive exposure to the digital asset space. But mostly those investors are trading on the main regulated market. That's why in May or June this year, the shareholders voted for uplisting of the company to the regulated market, which we hope will happen by the end of this year or first quarter of next year. Our main goal is to allow family foundations, which is like family offices and cooperative investment schemes, to be able to invest in our stock and have a passive exposure to the digital asset treasuries. Why? Because that way they can continue to keep tax benefits to their investments. Let me explain how that works in Poland. If you are a family foundation and invest in allowed asset classes, you have a benefit. You don't pay capital gains tax. Until you pay out money out of the foundation, which is a huge benefit. Unfortunately, if you start investing in crypto, you lose the benefit. That's why the only way for those family foundations to invest or to have an exposure to digital assets is not invest directly into the crypto space, but invest in the public company with kind of passive investment in the digital asset for them. That was one of the reasons we set up this company.
Is that something unique about Poland, or other EU countries have similar tax design?
I am not a tax advisor and I'm not a lawyer, so I cannot say all the countries have similar tax design, but in general, law in Europe is harmonized. There is one important factor which differentiates Poland from the rest of the Europe. As MiCA, which is markets in crypto assets, is in force in most of the countries in the European Union, Poland is a country which still has no implementation of this regulation. And that's very unfortunate. And that's one of the reasons why we believe that we are now a good answer to those family foundations and cooperative investment schemes if they want to have an exposure, passive exposure to the digital asset space.
That's a perfect segue to my next question for you, because I have been following a little about your country's resistance to MiCA's VASP licensing regime. Help me and my audience understand more what is going on, why there is resistance, and how it will impact all the crypto-related companies in Poland.
Let me give you the short version of a long soap opera. So MiCA applies directly across the EU since the end of 2024. Every member state has to pass a national law. Poland's parliament has passed the same law 3 times. And President Nawrocki has vetoed it 3 times. It was December last year, February and June this year. His argument is over-regulation, called gold plating, which is true in the law which Parliament passed and President Nawrocki vetoed. There are domain blocking powers, very heavy fines, 100+ pages where our neighbors needed a dozen to do the same. The government's argument is that after crypto collapse, with millions lost by its customers, a supervision vacuum is the great danger. We as Poles and Polish companies in the digital asset space are victims of the fight between the president and the prime minister, which has a majority in the parliament. And I would say it's silly and it's very frustrating. We have to use MiCA license entities which are set up in other EU states. All the taxes, all the benefits of our hardware go to other EU states, which adopted MiCA on time. That's very unfortunate for our country.
It resonates with me because in the past few years, U.S. regulators were hostile to this industry. So a lot of startups and crypto-related companies set up business outside of the U.S. Developers moved out of U.S. and lived and worked in other countries. And that's why right now we are also going through a big debate and battle to pass the Clarity Act. It's not a perfect act, but the industry needs the clarity in order for company to stay and expand and invest in this business. So similar to what Poland is going through. But for MiCA itself, some people from the industry in Europe not very happy with the regulation, saying that it's too harsh on the innovation, making smaller companies harder to operate. I would love to have your take.
To be honest, both sides have arguments. My take is it's better to have any regulation, which is like a starting point, and no regulations, which is like a Wild West. MiCA in general is net positive. I can say that as someone who pays those compliance bills every month. The positive is simple. One license, 27 countries, 450 million consumers. It's a single market for the digital asset space. It should be one single rule book for everyone. In reality, it's not harmonized. Every country has its own regimes. Different states in the same European Union have different approaches to the cost of supervision and tax rules. That shows that the idea is good, action is good, but it needs improvement. I know that regulators are already in talks. We will see MiCA 2.0 coming to the market, but it's not a bad idea that they implemented the first version. You also touched one very important topic, which I am a supporter of. Unfortunately, MiCA treats everybody the same way, which is not a good idea. In my opinion, there should be two speeds, different approach to big corporations, like big exchanges that have budgets for compliance. And there should be a different law for startups. I would call it sandbox. Otherwise, you are killing the innovation. You cannot expect a startup to follow all of those rule books. It's simply not possible. Those guys, if they want to follow MiCA correctly, they have to start approaching investors that will give them the paycheck to finance the burden implemented by MiCA. And it doesn't work like this. There should be a freedom of innovation. And once this innovation gets bigger, it touches the significance of the market, then it should go under the full regulation umbrella. I hope sooner or later, the regulator will introduce different rule books for big companies and startups.
So true. I agree 100% what you said. There has to be different regulations and legislation for different size of companies. Otherwise, smaller players have no chance to compete with bigger players.
I agree with you. It's not this innovation will not happen. It will happen somewhere else. If a founder has an idea, he will go to some jurisdictions, US, Dubai, UK, Asia, which will be so happy to invite him and even fund him, give him a place to stay, tools to work. It's silly that we as European nation, European Union, we are not thinking that way. But maybe it will change in the future. I hope so.
Do Europeans follow what's going on in the US? Clarity Act, SEC, CFTC's regulations, rulemaking. Are they interested in what's going on in the US, or it's just irrelevant?
To be honest, it depends. If you ask me or other people in the space, of course, we are interested in what's happening. If you are asking about the policymakers, most people involved in MiCA are also up to speed what's going on. If you are asking about the market in general, I believe that the understanding of digital assets in general is low. People still perceive Bitcoin and other digital assets as a novelty, as a kind of the speculative investment. We are hoping that European policymakers will work together with US policymakers. And we are a smaller market. Most innovation is happening in the US, not in Europe. If the European Union would start being closer to the regulations happening in the US, we would benefit from it. Well, in my opinion, it gets a little bit opposite. Other acts which are now being implemented, I believe are more defense acts in order to keep euro as a main currency within European Union and to stop the nomination of US dollar. But it doesn't work like this. You cannot enforce people to use euro if using US dollar gives them more benefit. Instead of using this enforcement, the policymakers in the ECB and other banks should work on better use case for our currencies. You cannot enforce people to follow bad ideas. They want to follow good ideas.
That the market and consumers decide what they want. Another thing is if the regulations and legislative environment more friendly in Europe, it would help attract US companies to invest in Europe. I see some American companies like Coinbase and Kraken have business in Europe create jobs there?
You touched a point which I mentioned, right? Those are huge organizations. Those are significant players. And MiCA is exactly built, or should be built, for such players, for Coinbase, Kraken, for other big institutions, just business as usual. If they go to an Asian country, they do the same. But MiCA shouldn't touch startups. Startups should have the ability to develop, to make mistakes, then think again how to improve. Unfortunately, burden created by MiCA kills innovation.
I'm happy to discuss this part with you because legislation, regulation are two key things deciding which direction crypto and digital asset will develop in the future. I hope that in the US we'll catch up with MiCA because MiCA is ahead of the US when it comes to legislation. For that part, you should have the credit.
Yes, but as I said, in my opinion, it's too tough for innovation and startups. But it's better to have any law than no law, and I agree with you. It's good that Europe voted for MiCA and that we have such a regulation. It's not perfect, but it's a good starting point. And I hope that MiCA 2.0 and following versions of the acts will start opening regulatory framework for startups to make it easier for them. I understand the debate which is happening that nowadays use of internet, AI and other tools. It's fairly easy for bad actors to use the sandboxes or make some not needed behaviors on the market. We have prosecutors, we have other forces to defend. We cannot put this obligation on funders, on companies. It should be done by those forces. Implementing tough law and says, okay, we don't know how to fight against it, so we will close this for everyone. It's not a proper behavior because that's the way how you kill innovation.
You have experience in Asia. How did you get involved in Asian market?
At the beginning of my journey with digital assets, thanks to my friend who was ex-First Data, I started to look into Asia. And I found that most of the innovation around the digital asset space is happening not in Europe, not in US, but in Asia. I decided that I will learn from there. During my visits in different Asian countries, it happened that it's not just me learning from them. Because of my background and experience in traditional markets, they can learn a lot from me as well. So I started to pick on conferences in Asia, and that's how I met my business partners, my friends, and that's how I bound myself with Asian communities. It became a natural bridge between different nations, different ideas, different use cases. That's how it started. Now I have my own businesses, which are also bridged in Asian countries. We often do it together. I'm spending my time every year in Singapore during Token 2049. I'm visiting my partners in Taipei, Taiwan. I'm going to China.
That's wonderful. Is there any synergy between Asia and your treasury company?
There are some synergies. One of our investors, which invested in Series F, is out of Hong Kong. We are using UCP, the company headquartered in Singapore, with a license in Singapore and also in United Emirates, for example. Today, markets are global. We're picking the best players in the market as partners.
The last question, as an accomplished entrepreneur, could you give one piece of advice to young founders?
Don't listen if someone is telling you, it won't work, make it work.
Good advice.
Thank you for listening. Your support means the world to me. Share this episode with friends and family, and don't miss out on my newsletter, worldledger.substack.com, for the latest updates. See you next time. Bye-bye.